Watch video 57 on Chapter 12, Mutual Fund Scheme Selection from the Workbook for NISM Series 5A, Mutual Fund Distributors Certification Examination, and review the multiple choice questions and answers. 1. What are the three main options available for investors in mutual fund schemes? A. Growth, value, balanced. B. Income distribution cum capital withdrawal, dividend, payout, income distribution cum capital withdrawal, dividend, reinvestment, and growth. C. Equity, debt, hybrid. D. Short-term, medium-term, long-term. Answer, B. Income distribution cum capital withdrawal, dividend, payout, income distribution cum capital withdrawal, dividend, reinvestment, and growth. 2. Which option is beneficial for investors seeking regular income? A. Growth option. B. Income distribution cum capital withdrawal, dividend, payout option. C. Income distribution cum capital withdrawal, dividend, reinvestment option. D. SWP, systematic withdrawal plan. Answer, B. Income distribution cum capital withdrawal, dividend, payout option. 3. What happens to repurchase transactions in mutual fund schemes? A. They are considered as a donation. B. They are treated as a purchase of new units. C. They are treated as a sale of units by the investor. D. They have no tax implications. Answer, C. They are treated as a sale of units by the investor. 4. What is a key factor that determines whether a dividend can be declared in a mutual fund scheme? A. The investor's request for a dividend. B. The fund manager's discretion. C. The distributable surplus of the scheme. D. The overall market performance. Answer, C. The distributable surplus of the scheme. 5. Why might investors prefer a systematic withdrawal plan, SWP, over a dividend payout option? A. SWP has higher fees. B. SWP avoids capital gains tax implications. C. SWP allows for more consistent cash flow. D. SWP requires less documentation. Answer, C. SWP allows for more consistent cash flow. 6. What is the tax implication of dividend income for investors? A. It is tax-free. B. It is taxed according to the investor's tax slab. C. It is subject to a flat tax rate. D. It is taxed only if the total dividend exceeds 10,000 Indian rupees. Answer, B. It is taxed according to the investor's tax slab. 7. Which option allows investors to let their money grow without annual taxation? A. Dividend payout. B. Dividend reinvestment. C. Growth option. D. SWP. Answer, C. Growth option. 8. What should mutual fund distributors ensure while selecting schemes for investors? A. The scheme has the highest returns. B. The scheme is suitable for the investor's needs and situation. C. The scheme has low management fees. D. The scheme has a long history. Answer, B. The scheme is suitable for the investor's needs and situation. 9. What does the disclaimer past performance may or may not be sustained in future imply? A. Historical performance guarantees future results. B. Past performance should not be the sole reason for investment decisions. C. Only new funds should be considered. D. Only funds with low returns should be avoided. Answer, B. Past performance should not be the sole reason for investment decisions. 10. What is one of the primary considerations for a mutual fund distributor when assessing a scheme? A. The popularity of the fund manager. B. The fund's advertising budget. C. The scheme's investment objective and strategy. D. The number of investors in the scheme. Answer, C. The scheme's investment objective and strategy. 11. Why is it important to consider taxes and loads when redeeming mutual fund units? A. They increase the investment amount. B. They reduce overall returns. C. They determine the scheme's popularity. D. They only affect equity schemes. Answer: B. They reduce overall returns. 12. What does keeping an eye on the taxes and loads refer to? A. Evaluating the mutual fund distributor's fees. B. Considering capital gains tax and exit loads during withdrawals. C. Monitoring the fund manager's salary. D. Tracking the performance of the fund. Answer: B. Considering capital gains tax and exit loads during withdrawals. 13. How should a mutual fund distributor develop a scheme selection methodology? A. By following trends in the market. B. By having a consistent written approach. C. By prioritizing schemes with the highest advertising. D. By selecting schemes based on social media recommendations. Answer: B. By having a consistent written approach. 14. What should investors assess regarding the dividend option? A. Whether it guarantees returns. B. Its tax implications and suitability. C. The fund manager's past performance. D. The number of investors choosing this option. Answer: B. Its tax implications and suitability. 15. In what scenario might an investor not receive a dividend despite selecting a monthly payout option? A. If the investor withdraws too early. B. If there is no distributable surplus. C. If the fund manager decides against it. D. If the fund's performance is below expectations. Answer: B. If there is no distributable surplus. 16. What aspect of mutual fund schemes do the SEBI regulations cover? A. The marketing strategies of AMCs. B. Fraudulent and unfair trade practices. C. The performance metrics of the fund. D. The investment objectives of the schemes. Answer: B. Fraudulent and unfair trade practices. 17. What does a mutual fund distributor need to understand about an investor before selecting a scheme? A. The investor's income level. B. The investor's asset allocation and goals. C. The investor's past investment history. D. The investor's personal preferences. Answer: B. The investor's asset allocation and goals. 18. Why might investors choose the growth option over the dividend option? A. To receive immediate cash flow. B. To avoid taxes on dividends. C. To benefit from capital appreciation. D. To ensure steady income. Answer: C. To benefit from capital appreciation. 19. Which type of investors might prefer the dividend payout option? A. Investors seeking capital appreciation. B. Tax-exempt investors. C. Investors looking for long-term growth. D. High-risk tolerance investors. Answer: B. Tax-exempt investors. 20. What is an SWP, systematic withdrawal plan? A. A method for investing in stocks. B. A way to withdraw money regularly from a mutual fund. C. A strategy to buy more units of a fund. D. A tax-saving investment option. Answer: B. A way to withdraw money regularly from a mutual fund. 21. What should investors do before selecting a mutual fund scheme? A. Compare past performances of all funds. B. Analyze the fund's portfolio and investment strategy. C. Invest based on recommendations from friends. D. Select funds with the highest fees. Answer: B. Analyze the fund's portfolio and investment strategy. 22. What can be a downside of chasing past performance when selecting mutual fund schemes? A. It guarantees returns. B. It may lead to poor investment choices in the future. C. It simplifies the selection process. D. It aligns with the investor's goals. Answer: B. It may lead to poor investment choices in the future. 23. What might happen if an investor continuously switches between mutual fund schemes? A. It will enhance returns significantly. B. It may lead to increased costs and decreased returns. C. It ensures consistent top performance. D. It diversifies the portfolio. Answer: B. It may lead to increased costs and decreased returns. 24. What is a common reason investors use a growth option? A. To receive cash payments regularly. B. To benefit from the compounding effect. C. To avoid market risks. D. To access their funds immediately. Answer: B. To benefit from the compounding effect. 25. In terms of mutual fund investments, what does liquidity refer to? A. The ability to sell units easily without impacting the price. B. The amount of dividends paid out. C. The investment's performance metrics. D. The tax treatment of the fund. Answer: A. The ability to sell units easily without impacting the price. 26. How does the choice between dividend and growth options impact tax for investors? A. Dividends are always tax-free. B. Growth options typically incur no tax until units are sold. C. There is no tax implication in either option. D. Both options are taxed at the same rate. Answer: B. Growth options typically incur no tax until units are sold. 27. What is the benefit of the growth option for long-term investors? A. Immediate cash flow. B. Higher dividend payouts. C. Compounding of returns. D. Reduced market risk. Answer: C. Compounding of returns. 28. Why is it important for mutual fund distributors to maintain a written scheme selection methodology? A. To comply with regulatory requirements. B. To avoid bias in selection. C. To provide consistency in their recommendations. D. To increase their sales. Answer: C. To provide consistency in their recommendations. 29. Which of the following best describes the function of a mutual fund's investment objective? A. It outlines the fees associated with the fund. B. It defines the fund's strategy and expected outcomes. C. It guarantees a specific return for investors. D. It lists the past performance metrics. Answer: B. It defines the fund's strategy and expected outcomes. 30. What role do taxes play in the selection of mutual fund schemes? A. They have no impact on investment decisions. B. They can significantly affect net returns and cash flow. C. They only apply to high-value investments. D. They determine the fund manager's salary. Answer: B. They can significantly affect net returns and cash flow.